Tommy Sear, economist and head of Greater China Research at OCBC Bank, joins us this morning. So, Tommy, just looking at this more conservative growth goal of around 5%, how does this inform what the policymakers in China are thinking in terms of external risks for this year, whether it's from a global economic slowdown or geopolitical tensions with the US and its allies?
Yes, hi, good morning. I think one of the key reasons behind this slightly conservative numbers is really because of the uncertain external environment. So I think, as mentioned by the Premier Li Keqiang, I think this year we are seeing the slowdown in the global economy. So if you look at the forecast from the WTO, for example, so now the WTO expect the global trade growth this year to slow down to about 1% from the 3.5% last year, right? So I think that is going to add pressure to the exporters in China. In fact, last year, the exporters are still the contributor to China's growth. I think for last year's 3% growth, 0.5% actually came from the exporters, right? But for this year, given the global slowdown story, I think most likely we're going to see the drag from the net exporter rather than the contribution from the net exporter. So other than the slowdown in the global trade, I think the rising geopolitical tension also another reason to take note. In particular, now we are seeing more and more Chinese companies have been added into the entity list by the US government. So I think this tension will continue to keep the pressure on the overall recovery of the Chinese growth. I think that's really the reasons why China has been trying to be conservative. Anyway, I think surprise on the upside is always good than missing by the big margin, right? I think that's the lesson probably China learned from 2022. So that's why I think overall around 5% is certainly on the lower band of the market expectations.
Right, managing expectations now so that potentially it can exceed them in the future. But Tommy, talk to us about, given this external environment, the extent in which the domestic consumer-driven recovery is going to help offset this.
Yes, I think this year, I think the domestic consumption story is very important. So if you look at the government work report, in fact, I would say that the domestic demand actually topped the priority. China is going to really continue to support the domestic demand. But talking about the domestic demand, I think we can look at it from two angles. I mean, the first angle is really on the consumption part of the story. The second angle actually is still about the investment, because in the end, the effective investments are better. Infrastructure is still very important to boost the consumption. That's why I think both sides are still very important. In terms of the overall the consumption, I would say China was still focusing on a couple of things. For example, we call the big ticket items, right? I mean, for example, your car sales, especially the new energy car. I think that will continue to be very important target for China to support the economy. So other than the car sales, they'll really focus on those like smart appliances and the green construction material, etc. I think those has been mentioned by the Li Keqiang in the government work reports. So those are more like the overall the consumption story. So other than the consumption story, we do expect China will continue to invest, to boost the overall infrastructure investment, to boost the overall effective investment. So which we can put the two domestic demand story together, which will become the key drivers to China's recovery this year.
Given this lower than expected growth target, though, do you think that this might raise further concerns that China isn't done with the crackdown on the private sector?
Personally, I don't think so, because as you can see from the government report, I think they do mention something to support the private sectors. Because in particular, we know these 2 years, the government funding become tighter and tighter. So to some extent, China need the private sector to play a role in terms of the funding contribution. So other than the funding part of the story, I think the other important part, the private sectors will play a very important role is in terms of the job creation. So if you look at this year's government target, one of the interesting targets is they actually increased the urban job creation target from 11 million to 12 million. I mean, of course, that's going to take into account the record high of number of the graduates this year in China. We're talking about 11.58 million university graduates this year. So other than that, I think the private sector is always an important part in terms of job creation. That's why I think to some extent, we do expect China will still allow the private sectors to play a bigger role this year, whether it being to join the competition or whether it being in terms of the job creation. That's why I don't think we should be too worried about the crackdown on the overall, the private sectors for this year.
Right, especially in the tech space. But what about for the property sector, Tommy? Did you hear anything in there that suggested we're going to get more supportive policies, given how the property sector has really languished in the past year or so?
Yes, I think property sector is more interesting at the moment because I think there's two parts of the story we can look at. I mean, the first part is, of course, the China has already realized, the property sector is important to the economy. So in fact, in the past few months, even like Vice Premier Liu He has mentioned a few times, the property sector is the pillar sectors for China's economy. So we can't really grow without the property sector in China, right? So I think this is something now is very clear, property sector is important. So we are going to see more measures to support the property sector from that angle perspective. However, on the other side, I think to me, if you look at the government work reports, I feel like, this the policy about the property sector is more like from the bottom line thinking approach. So which means we try to diffuse the systemic risk from this property sector, but it's not really 100% revive that. It's not really 100% to reboot the sectors, because in the end, from the long-term perspective, from the more sustainable growth perspective, China needs a more well-diversified growth engine. So China cannot go back to the old model, which is rely on the land sales, rely on the the property investment driven kind of the growth. That's why I think property sector is in a very interesting juncture. On one hand, we're going to see more policy support, but on the other hand, it's more like a bottom line thinking approach, which means it's good to survive, but are we going to see a lot of measures to revive? I think this is something is still facing quite a lot of uncertainties at the moment.
Right, the property sector, of course, is key to domestic demand, given how it's tied up with the Chinese consumer story. Tommy, thanks so much for sharing your analysis with us. Good to chat with you. Tommy Xie, economist and head of Greater China Research at OCBC Bank.